Hello everyone, thank you for joining us for today's webinar, Momentum Trading by Warrior Trading. My name is Rob Livson. I'm also joined by my colleague Joe Ely. We are going to be moderating along with our presenter Ross Cameron of Warrior Trading. We are happy to present various topics and presentations across different variety of topics, strategy, platform analysis, and different points of view from different educators. Lightspeed's been happy to work with Warrior Trading with providing some great services to their members, and Warrior Trading certainly providing some great education and a place for traders to learn. So we're happy to have Ross present here today. He's done some webinars with us in the past, and it's always been a great turnout. So we're just very excited to get started here. Before we do, I want to just do a quick disclosure here and make sure that everyone's aware of that here. So just one moment here. This presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any specific securities. Since we don't know everyone's investment objectives or risk tolerance, we're not endorsing any specific trading strategies. Lightspeed Trading, LLC, Lightspeed is not affiliated with these service providers. Data, information, and material content is provided for informational and educational purposes only. This content neither is nor should be construed as an offer, solicitation, or recommendation to buy or sell any securities. Any investment decisions made by the user through the use of such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed does not endorse, offer, recommend any services provided by any of the above service providers, and any service used to execute any trading strategies are solely based on the independent analysis of the user. With that being said, I will hand over the mic and the screen share to Ross, and we will get started, guys. So thank you very much. And here we go, Ross. Please take it away.
Hey. All right. Thanks, Rob. Let's see. Let me share my screen for you guys. Let's see. I've got to select the screen I want to share. Screen 2. There we go. All right, so let me know if you guys are able to see that screen. So I'm just going to drop down the chat feed. All right, so yeah, and Rob, if you just want to check, because I can see the organizers chat, but I can't see any of the chat from the attendees.
You should see it in the separate questions box. Do you see that?
Oh yeah, I see questions. Yep.
Okay, you can separate that and make it larger as well.
Oh, cool. Okay, so I'll do that. All right, awesome. Okay, hey everybody. So thank you guys all for registering to this webinar and showing up this afternoon. This is going to be a lot of fun. So as you can see, we're going to be talking about momentum trading. Now, we're in a market right now where we've seen some incredible opportunities for momentum traders. So I want to share with you guys a couple of the techniques that I've been using to trade momentum stocks. Now, before we do that, and the two real specific techniques is using level 2, using hotkeys, and also reading the time and sales. Before we get into those techniques, let's talk a little bit about what is a momentum stock. So a momentum stock is a stock that's experiencing really strong trend, and we generally refer to these as stocks that are moving to the upside. So this is a stock yesterday that moved from about $6 a share to $7.70. And you know, by any standard, this is a really big move for a stock to experience in one day. You know, a 20–30% move is really phenomenal. And what's very interesting is that we see stocks every single day that are making 20 to 30% moves. That was one of the biggest discoveries that I made as a beginner trader who was really trying to figure it out. It was realizing that every single day there's a stock that makes a big move. So for me, my approach is, rather than trying to day trade stocks like Apple or Facebook or Netflix, these big large cap stocks that may only move 2 or 3% a day at most, I instead wanted to hone in and really focus on the stocks that had the potential to make 20, 30% moves. Because even if I can only capture a fraction of it, that right there is a huge opportunity. So this is one example of a momentum stock, and I'm going to show you several examples this afternoon. Now, one of the platforms that I like to use, I of course trade on Lightspeed, and I use eSignal right here for my charting, and I use Trade Ideas for my scanning. So I'll mention those tools sort of interchangeably today. And here is my Lightspeed platform. I finished the day up $5,830.12 trading momentum stocks. So, that right there shows you the potential of these stocks. Every single day we're seeing these opportunities. In the last 15 days, I've made over $85,000 trading these types of stocks. So we'll look at the level 2 here, and I'll show you kind of how I find my entries. But just in terms of stepping back, here's another stock that recently made a really big move. I mean, from $5 to $12 in one day, that's more than 100%, right? That's crazy. And you might think, geez, I mean, how often does something like that happen? Once a year? And the reality is, we see these opportunities all the time. So what you have to recognize is that, of course, trading stocks like these that are moving this much, they definitely carry more risk. And so it's a risk-reward analysis that we have to do. So, if I wanted to reduce my risk, I could be trading stocks like Facebook, or, trading stocks like Netflix or Amazon. See if these charts pull up. And I don't know what your personal risk tolerances are. So nothing that I say today, again, is advice of this is what you should be trading. I'm just sharing with you what I focus on. And for me personally, I don't like trading these high-priced stocks, $260 a share. It's just outside my comfort zone. It ties up too much capital. So for me today, making $5,800, just under $6,000, my largest position was a $35,000 trade. That was the largest position that I held. If I bought even just 1,000 shares of this stock, I'm tying up $250,000 in equity. That's a lot of money to tie into a trade. And, obviously this is a real company and I don't have to worry probably too much about it. But for me, that almost feels like more risk than trading the small caps. So this was one today that certainly was strong. And you guys probably remember LFIN. This is a really crazy IPO from December. This stock, I mean, you think you've seen it all, and then here comes a stock that in one day, and I'm just zooming back so you guys can see the chart, in one day it goes from $40 a share, which at the time seemed awfully high since the stock IPO'd at $7. I thought, geez, okay, $40 a share, this is crazy. And look, in one day, it went all the way up from a low of $39 to $142 a share. That was the most extreme move I've ever seen. I actually didn't even trade it. I was too nervous to trade it because the price was too high. I thought the risk was way too high on it. But it does nonetheless show us momentum in probably one of its most extreme forms. And so we're going to see these opportunities day in and day out. And the question is, do you have the skill set to be able to capitalize on these opportunities when they present themselves, right? So number one, how do you find these opportunities? And then number two, where do you take the entry? Where do you get in? What are your indicators to get out? So my system for trying to find these stocks is to use stock scanners. That's just really my go-to method. So each morning I start by running a gap scanner. This is a scan of all the stocks in the entire market this morning, gapping up more than 4%. OHGI was one of the leading gappers. And you can see this is a stock that, although it gapped up today, it didn't hold the levels very well. So a stock gapping up means it's going to open higher today than it closed yesterday. And that, of course, gives us some indication that traders are interested in the stock, and it may be one that could go 20, 30, 40% in a single day. It's opening higher and it could continue to go higher. That didn't end up being the case with this one, although it did give us some potential. So I start the morning going through my gap scanner, looking for stocks that are going to open higher, and then I check the news, and I like to see what the catalyst is, and to see if I think that there's a likelihood that the stock will open and continue another 20–30% higher. Now, once I've found a couple stocks on my high-day scanner here, or my gap scanner, what I do is I pull up the level 2. All right, so I pull up the level 2 just as you can see here. That's what these windows are, and I'll type in the symbol. So OHGI was the one that I had on watch first. I type it in, and then I usually would say I want to be a buyer over the pre-market highs. So this one had a pre-market high of, let's say, oh, sorry, what was the high? Pre-market high was 289 on this one. Yeah, 289. So I put an order, let's say at 290. All right, so anticipating a break of pre-market high. And now once the bell rings, all I need to do is press the buy button and I'm ready to go. So I don't always use hotkeys when I'm entering these trades. I can just enter them. I can prepare them before the bell rings, have the order ready to go, and then I just press the buy button once the bell rings and once I see my entry set up. All right, so I'll get back into that more in a second. Now, the other way that I find stocks is by using my high day momentum scanner. So this scanner at any given moment is searching for stocks in the market that are moving higher. So I have this very finely tuned, these are proprietary custom settings that I've created to search for momentum. And so one of the stocks that was on the scanner earlier this morning, let's scroll back, we saw OPGN on the scanner this afternoon. OPGN, it went from $5 all the way up to $7.60 in about 25 minutes. I mean, that is an incredible move. It's crazy. And so what you have right there is an opportunity. I didn't trade this stock, but this was an opportunity potentially to make a really good profit. Sorry, so let's scroll back a little bit further. So here we go, ACHV. So this is one of the ones that I jumped in this morning. So we see it hitting the scanners. It was not on my watch list. It was not a gapper, but it hit my scanners. I type the symbol in, ACHV. I look at it and I see, okay, the stock is moving up. It's starting to squeeze up. It squeezed up to 229 and pulled back. I jumped in it as soon as I saw that it had a strong daily chart. This one didn't have any resistance until the 200 moving average right here at 295. It ended up kind of breaking over that level. It tapped 320 and then it dropped back down. So as soon as I see a stock on the scanner, I take a look at the chart, and I obviously have to identify a strong chart. And that's not something that we're going to get into a lot today. If you're not already familiar with strong charts, this is something that we talk about a lot in our classes over at Warrior Trading. You can also check out my YouTube videos on my YouTube channel. All right, so I look for a strong chart, meaning we're above our moving averages, above the 9 and the 20, and with room to the 200. So even in this case, ACHV, it had like $1 plus of range before it would run into that moving average. So I wasn't really concerned about that resistance. If the scanner alert was, if it was priced at 285 and the 200 is at 295, well, in that case, I'm going to think, okay, this is actually really close to resistance. It's too close, and I'm not going to feel as comfortable taking the trade. I would instead wait. So once I've looked at the chart and I've kind of said, all right, it looks interesting, the next thing I do is I open up my level 2. So I pull up the level 2, as you can see right there, or as I'll show you in the actual live level 2 here. And I pull up the stocks, ACHV, and I look at the spread. That's the first thing I look at. What's the spread? Now, the spread on this stock right now is 192 by 202. It's got a 10-cent spread. So I look at that, and initially, if this was regular market hours, I might think, no, that's a little too much of a spread. And what you also can look at is not just the spread. Remember, the spread is just the bid and the ask, just these two top levels. But then look down. So when you look down, you're seeing the depth of the market. So just on the side here of the bid, we see that there's a buyer at 192. And it shows 1. That means he's got 100 shares. And then we see a buyer at 182. and that shows 1,000 shares. So here's the concern. We only have buyers at 92 and 82. So once this buyer is gone at 92, the price could drop another 10 cents. And so right away, I can see that this appears to be a little bit of a more thinly traded stock, meaning it could drop quickly, although it could also move up fairly quickly. It could go from 202 to 209 to 210, 213, and then up to 220. So we can see how quickly it can move. Now, I personally really like to color my level 2s based on the tiers of price. So when we look at these different colors, what you notice is that each color is a price tier. So here we only have one row of green. Green is the first depth of market, and that's because there's only one ECN or market maker sitting right here at 192. If we go down to 182, it's also just one tier. Oh, now it's 181. But here at 180, we see two rows, and that's because there are two market makers sitting at the same price. All right, so that's how the colors are based on tier. And then anything below 4 tiers is all gray. So Matt, to answer your question on why I would use 4 orders of 2,500 shares instead of, let's say, 2 orders of 5,000 or maybe 1 order of 10,000, I use 2,500 shares as my default order size. This is for me because when I first get into the trade, if I, let's say, want to get in this at 90, I can double click the ask. I can also double click each individual row and buy at 209, 210, 213. So I can double click on the side and then I press the buy button. I like to do that because what we will sometimes see in the market are hidden sellers. So right now, this is showing 200 shares. So if I press the buy button, it's showing 400 shares. If I press the buy button right now, presumably, if I buy 2,500 shares, I will buy all of the 400 that are for sale here, plus 200 of these, and probably plus some of orders that are a little bit higher at 202, maybe even 209. However, if I press the buy button and I see my order go through, but it still shows 200 shares, I know that that person is a hidden seller. And we don't usually see it with 200 shares, but we may see it with 1,000 or with 2,000 shares. Because what you can do is you can choose to hide your shares. So we can choose to only show 10% of our size. So I could only have 250 shares visible while I'm actually trying to buy or sell 2,500 shares. All right, so a lot of people will do that if they're, let's say they're holding 25,000 shares. They'll say, oh, I'm only going to make 2,500 visible because if I put a 25,000 share sell order here, it could affect the market. It could scare people away, so they hide their shares. So I can see if someone's hiding shares on my first order, and if I see that, I will not continue to press the second order. I'll say, nope, that's it. I'm waiting for other buyers to come in, because I don't know how many shares this person is hiding. Now, if I see that there's no hidden shares, the price is moving, my order's going through, I'm buying from sellers, then I'll press it 2 or 3 more times and go up to full size. Now, one of the things that's nice for me is that, of course, and for anyone using Lightspeed, is that our commissions are so low. We have very reasonable commissions, and so that makes me feel more comfortable just using 2,500 shares. And yeah, I press the order 4 times. It's a little more in commission, but it really doesn't bother me to do that. I may get to a point where I'm trading with large enough size that I'll increase it to 3,000 or 4,000 shares as my base order size. But beyond that, I would probably always continue to use several small orders to piece my way into a trade, especially when I'm taking as much as 12,000 or 15,000 shares of a full-size position. All right, and to answer the other question there about the market, I have mine set by default to NASDAQ. I'm fine with that. The routing is fast. I also use BATS and EDGX. So those are the 3 routes that I use, and I've been really happy with the routing speed on all of these. If for whatever reason one of them was going slow, I could just quickly drag down and change to the other. All right, so anyways, going back to reading level 2. So the first thing I look at is the spread. What's the spread look like? And if the spread is relatively tight, less than 10 cents, maybe 5 cents or 6 cents at most, I'll think that, okay, that's not too bad. I then look at the depth of market. How spread out are all of the orders? Because, if we pull up some of these stocks like, Siri, this one is, the spreads are going to be tight, fairly tight. And the depth of market is going to show lots of buyers and lots of sellers at each tier. This is a very thickly traded stock. Bank of America is fairly similar. These are stocks with large floats. Look right here, we've got a 100,000 share seller at 32.19, right? That's a lot of shares. And then there's another 50,000 for sale at 32.20. Definitely a very thickly traded stock. And there are some advantages to buying thickly traded stocks. But for someone who's actively day trading, we usually want to be investing or buying stocks that are going to move faster. And so these two being more thickly traded and with these big orders are not likely to move very quickly. So they make them maybe more suitable for longer term investments, swing trades, things like that, not as much for day trades. So back here to ACHV, we look at the spread, we look at the depth of market, and then from that point, I make the decision of, okay, am I ready to jump in the trade? And so the next step is for me to look at the time and sales. All right, so we've got our level 2, and then we have our time and sales. So time and sales is also sometimes called reading the tape. Reading the tape is just watching all of those orders go through. So in the older days, they had the ticker tape machines. And those ticker tape machines would basically be printing out, it's like almost like printing out a receipt. And you just see, all of the prints coming out. And each one of those prints gives you the price of the stock, the size of shares traded, and the time. And here we also see the market maker that is sent. We have more information now maybe than they did in the older days. But so we see all of this information. How does that help us? Well, what I really like here is that I can see on the level 2 that this is the current ask price. The current ask price is 283.26. So someone is trying to sell shares at that price. And then right here, I can see the actual orders that go through. So if I press the buy button, I will see it right here. Now you also see it right here, but not in as much detail. So I kind of don't even look at that. I look at it in this larger window. Now, what you guys can do is you can go up to new and go down to level 2 to pop out new level 2 windows like this. And then you can go to new and go to time and sales to pop out a new time and sales window like this. And then of course you can link them together using the linking feature. So you can go in to the settings and you can link these together so they stay together. I think by default, this will link to whatever is in focus, the window that you're selected on, which is fine. You can do it however you want. So anyways, going back to the time and sales. So right here, you can see, okay, those are 3 orders that just went through and they're seen right here. So I look at this very closely when I'm thinking about buying a stock because I want to see right now, what are other people doing? Remember, the market is just an island. It's where buyers and sellers come together to trade this shares of the stock. So what I want to see is right now, do we have a lot of buyers? Are there a lot of buy orders going through? Or are there a lot of sell orders going through? So orders that are priced at the bid price right here are going to go through as red. Because when an order goes through at the bid price, what's happening is someone is selling shares. Remember, though, we are in a closed market. They're selling shares to someone who's buying the shares. So every time there's a transaction, you have a buyer and a seller, right? You sell a car to someone who buys it. You buy a car from someone who's selling it. Same with the shares. We have a limited number of shares in the market. Every stock has a limited number of shares available to trade. That number is called the float. So when we're trading, we're buying and selling out of this same pool. But when a transaction occurs on the bid price right here, it's considered a sell and it's going to appear in red because someone is basically just selling to a buyer. And when an order occurs on the ask price, we consider it a buy because someone is buying from a seller, and those will then be green. So what we want to see is lots of green prints going through if we're planning on being a buyer. Now, to answer your question there, I do not short stocks very often. I prefer to trade to the long side. Now, there's a couple of reasons for that. One of the reasons is I feel that the market is it's almost structurally set up to encourage traders to be buyers, just systematically, and for a couple of reasons. Number one, we have what's called the short sale restriction. So I'm not sure how many of you guys are familiar with this, but the short sale restriction says that if a stock has dropped more than 10%, you can't short it when it's dropping. You can only short it on an uptick. Now, that seems kind of crazy because you know what? There is no such thing as a long side restriction. We will see stocks up 100% and they don't prevent you from buying on the ask, right? They don't say you can only buy it when the stock is dropping. It's going up, yeah, keep buying it, no problem. That's kind of the attitude. The market goes higher, keep buying it. But when it goes down, in come these systems to prevent stocks from dropping. So that's one reason. A second reason is because, remember, we have to find shares available to borrow. And a lot of the small cap stocks, it's difficult, even with, even if you had accounts with every broker in the world, some of them simply do not have shares available to borrow. So now you're limited. You might see an A quality setup, but you can't trade it because there's no shares to borrow. That's number two. And number three, when you short stocks, you could potentially lose an unlimited amount of money. Because if you short a stock at, let's say, $7 per share, let's just use a real life example, LFIM. Let's say, for whatever reason, that you decided to short this stock at, let's say you shorted it at $10 a share. And let's say you shorted $10,000 worth because you took 10,000 shares. All right, so it's $100,000 worth. So you shorted it at $10 a share. Well, the next day it goes from 10 to 11 to 12 to 13 to 14 to 15. When it hits 15, you're down $50,000. It continues higher. It goes up to $20, you're down 100 grand. It goes to 30, you're down 200. To 40, you're down 300 grand, 400 grand, 500 grand, 600, 700, 800, 900, $1 million. You could literally turn a potential 10,000 share position into $1 million loss when something like this happens. I mean, God forbid, you took this trade and you lost your internet connection, right? Or you fell asleep at your computer, you were really tired, and you wake up and the stock went from $40 to $140 per share. You would lose more than you put into the trade, right? That first trade, 10,000 shares at $10, you only put in 100 grand, and then you somehow lost $1 million. Now, if you bought this stock right here, let's say you bought 1,000 shares at $80, what's the most you can lose? The most you can lose is the money you put in. So the most you could lose is the full 80,000. If the price goes to zero, that's the most you can lose. So your downside is capped, and that feels safer. And then the fourth reason is that you can't short stocks in an IRA, and a lot of our students, including myself, trade from time to time in retirement accounts. So being a short seller means you simply can't trade in those types of accounts. All right, so going back to the time and sales here. So what I look at when I'm getting ready to take one of these trades is I first pull up the chart. So let's look at an example of one of our trades from today. So ACHV. All right, so we'll pull this up here and we'll go over to the left. Let's see. All right, so I took a couple trades on this, but we'll look at the second trade because that one's kind of a little bit more interesting. All right, so the stock hits the scanner. I took my first trade at $2 and sold it at $2.13. It then pulls back. Now, one of the things I really like to do is buy stocks after the first pullback. Something that you guys will probably notice if you follow these small caps is that a lot of them will pop up and drop down. And whether they're popping up because someone is shorting a position or it's a newsletter alert or whatever it is, we never really know why these stocks are popping up. But we see them hit our scanners, we see it popping up, and sometimes we will just simply jump in. We'll say, I'm going to buy it because this is a stock I'm familiar with. It's a strong stock with a history of making big moves. I just want to jump in. I think it could, end up going 20, 30 cents because, sometime in the last month it did something similar and it worked out really well. Other times we'll say, you know what? I don't know if the stock is going to hold. It might do the old pop and drop where it pops up and drops back down. I'll wait for the first pullback. That's always the safest thing to do. So we wait for the first pullback. And that was this red candle here. The stock pulled back. And then it started to move back up. And you can see, even in this red candle, when you kind of look even closer, this is a 1 minute chart. But if you really dialed in, what happened in this candle? The price dropped down. That's why we have that red lower wick. It dropped down and then it curled back up. And it ended up closing almost the same price as it opened. And as it curled back up, buyers were starting to step in and buy up shares. So it started to curl back up and it broke over the high of this candle. The high was 216. I like to look for the first candle to make a new high. And so what I did is I started buying it right here at 220, 223, 225, and 229. I bought 10,000 shares. And again, I did the same thing where I got in small blocks. Number one, because buying 10,000 shares at once for me is a little too much. And number two, if I bought it and I immediately saw that it was a hidden seller, I would regret holding 10,000 shares because the price probably wouldn't go much higher. So I did not buy this using hotkeys. I bought it simply, actually, this one I might have bought using hotkeys. This one I might have, there's two ways I might have done it. This first way is I put the order right here at 25 or something like that, and I just pressed buy 4 times. The other way is using a hotkey, and I'll show you my hotkey that I have for buying 2,500 shares. I'll show you that in 1 second. So I got in there for the first candle to make a new high, and I got in because when I was looking at the level 2, I saw all those buyers starting to come in. Buyers at 14, 15, 16, 17, 18, 19, boom, I'm a buyer at 20. It's still going. I'm a buyer at 23, 25, 29. And what happens? It goes from $2.16 all the way up to a high of $3.20. Now, what I always do is I sell when I'm up about usually 20, 30 cents, sometimes sooner. But in this case, I sold half when I was up 30 cents, and boom, 5,000 shares times 30 cents, 5 times 3 is $1,500. $1,500 in my pocket. All right, so I sell half. I sell more at 56, more at 72, more at 86. The high of 309 is where I sold a little bit more. So I'm selling as the stock squeezes up. Now, yes, in hindsight, I could have held the whole order and sold the whole thing up here at 320, right? Hindsight's always 2020. It's perfectly easy to be a Monday morning quarterback. But what I like to do is take profit along the way. I've done that for a long time. And what it does is it means I'm consistently making money. I'm consistently profitable. So even if I could have made more money, I'm consistently green. You'll notice today I traded 3 stocks and I'm green on all 3. My accuracy right now is about 80% so far for the last 30 days. Over the last 2 years, my accuracy has been 68%. So I'm pretty accurate. I'm pretty good at picking stocks that can make these good moves. And so I jumped in this here because I saw on the level 2, number 1, that the spread was good, the depth was okay, it wasn't too loose, it wasn't too spread out, it also wasn't too thickly traded, and I was seeing the buyers going through on the time and sales. All right, so that's what prompted me to get into that trade. The better you get at reading level 2, reading the time and sales, the faster you'll be able to trade. So if you want to trade momentum stocks like these ones, you're going to almost inevitably need to be able to trade quickly because the price moves so fast. And yeah, when I have 4 separate trades all in the same second, I'm pressing the buy button 4 times. And I'm sure Rob will say, great job, Ross, that's a really good thing, because of course that's 4 commissions for Lightspeed. But you know what? For me, it works. I just like doing that. it's a funny way to do it, but when I make the order too big, I get nervous. And again, the commissions are so low at Lightspeed, it allows me to trade that way. So for me, I don't trade to manage my commissions. I trade to be a profitable trader. And yeah, I could do things differently to try to reduce commissions, but if it would jeopardize my strategy or my confidence level, it's not worth doing it. All right, so that's a great question, Matt. What do I put as the through or slippage for my hotkeys? All right, so let's get into it. I'll show you the hotkey in 1 second. So the next step here is setting up your hotkeys. The most critical hotkeys for me are for selling and for canceling orders. Intuitive hotkeys that are easy fit for your hand are really important. I've got my wrist brace over here. This is too many years of using the hotkeys. I have to wear this when I'm trading, and I wear it at night. Unfortunately, it starts to take an effect after doing the same hotkeys, year after year after year. But that's the price you pay, and I don't mind since I've been fortunate to be so successful as a trader. This wrist brace was only like 30 bucks. So, and then number 3, hotkeys that automate your share number are preferred for fast execution, and I'll show you what that means in a second. All right, so let's build a couple of hotkeys here. We'll back out of this. All right, so to build your hotkeys, what you want to do is you want to go to settings right here. So we're going to click on this little widget, and then I'm going to go over to custom orders. All right, and what you're going to see, boom, is I have a hotkey to buy 2,500 shares right here. All right, so we're going to go into edit, and I'll show you what this hotkey looks like. So we click edit. We've got the title of the hotkey, that's the name. We have the market. So the market is the ECN that I want to use. And just to quickly answer your question, Jeff, no, I don't like to use market orders. I never use a market order. And the reason is because I can't control the price that I'll get in at. So for instance, there are times, like last week I was trading from my office in California. I have an office on the East Coast and I have an office on the West Coast. And the reason we have those 2 offices is because we've got more than 20 employees at Warrior Trading, and they're all working behind the scenes to make sure our classes are streaming really well, our chat room is working really well. And so I go back and forth between those offices. When I was in California, I was having in the hotel a problem with my internet. And so what happened was, I pressed the buy button and nothing happened. And it's because I had actually lost my connection for a second. Now, if I had pressed that as a market order, and I maybe just had a little bit of lag because I'm having an internet problem, I would have gotten filled, but I would have gotten filled at a different price from what I would have been comfortable with. And so I like to use limit orders right here. And that means that I'm going to be getting filled at a very specific price. So right here, I'm saying the quantity is 2,500 shares. I'm going to display visible. I'm not going to hide the shares. There's no point in doing that. And my through is 3 cents. So I've gone as much as 5 or even 7 cents. Lately, I've been using 3 cents and it hasn't been a problem. Although actually, I say it hasn't been a problem, but I have been commenting several times recently about how I'm not getting filled. So maybe actually I should move that up to 5 cents and that would be better. All right, so let's just leave that at 5 cents. So 5 cents above the ask. All right, so that means if I want to buy this stock right now, when I press that hotkey, the order will go through at 207. It'll be a buy order, 207, using the route of, what did I have set there? Bats? I think I had bats. All right, so that's it. I have the confirmation window turned off. That's obviously, comfort zone of whatever you want to do, but that's what I do. And of course, it's a buy order. So buy order, market is bats, not doing any of these things. The order is visible, 5 cents above the ask, quantity 2,500 shares. All right, so we're going to say done. All right, now I can go back in and edit it because now, well, what key is going to make this order happen? So let's go to map key now. The other way to get there is just to tab and click keyboard. All right, so here we go. I want to use the hotkey of Shift plus the button 1. All right, so on the left, we have all of the keys on the keyboard. So we're going to press the button 1, and boom, here are the available hotkeys for the button 1. We have 2. One is S1, which is Shift +1, and the other is C1, which is Control +1. So we're going to use Shift 1. We're going to click on the hotkey right here, which is going to appear under Custom Commands. This is the one that I just made, and I'm going to map it to that key. All right, so I'm going to say, yes, I want to remap it. That's fine, because I'm remapping it to the same one. And I say, OK, enter. And that's it. That's how easy it is. So that's the hotkey that I'll use for buying. Now, the hotkey that I use for selling, let's go back over here, and this is the one that I use most frequently, is for selling on the bid. So this is my bailout hotkey. So let's go to edit this. All right, so we've got a hotkey here. The market is, once again, bats, and this is a sell order. So we're selling. The order is bats. It's a visible order. I'm going 5 cents through the bid, and that means it's 5 cents below the bid. All right, so 5 cents down. And we're going to close out. This I love. I absolutely love this. Close out. I can choose how much of the position I want to close out. I can either do full position, half position, or quarter position. So let's say that when I pressed Shift 1, when I first got into this trade, I didn't get filled 2,500 shares. I got filled 2,178 shares. Well, now, am I going to have to go really quickly type, I want to sell this 10 seconds later, let's say a minute later for a 30-cent profit, that's $600. But I've got to type really quickly 2,178 shares, and I'm nervous. I fumble. I type 21,800 shares. You know, I screw it up, and I press the sell button. I make a mistake. Bypass all of that right here. Order size, full position. Now you could choose to sell half, and that's my other hotkey, and you can choose to sell a quarter, and that's my third hotkey. So when I'm up 30 cents, boom, sell half. When I'm up another 20 cents, boom, sell half. But another 20 cents, sell half. And I'm going to keep selling half of whatever I'm currently holding. Sell half of half of half of half. I just continue doing it. I love this hotkey. So right here, we'll say sell full position, and that'll be 5 cents below the bid. Now, alternatively, I often will sell on the ask price. So it's still a sell order. I switch this to ask, and I say no through, 0. Because I just want to sell it on the current ask price. I don't want to sell it above. I don't want to sell it below. I want to sell it at the current ask price. So that's my other one. I can sell half on the ask. I can sell a quarter on the ask, or I can sell the whole thing on the ask. It's whatever I want to do. Now, I could also choose quantity if I wanted to, but I don't want to. I want to sell positions based on what I'm holding. Now, I started using BATs about 6 months ago, and I've been really happy with them. For a long time, I used EdgeX and I used ARCA, and I had a couple of issues where I would try to place an order and I would get an error message that said the position exceeded risk tolerance or something like that. And it happened a couple times, and so I quickly switched to BATs, sent the order, and it worked. And so since then, I've just been using BATs as my route for the most part. Now, I use NASDAQ on the order entry window here, and I haven't had any problem with that. So I don't know, maybe it was just a passing thing. But really, for the most part, I'm pretty agnostic when it comes to market makers. I don't really care. I'll use any one. It doesn't make a big difference for me. All of these route so much faster than the routing that I used to use at some of the the big full service brokers, because they use smart routing, and I just never found that it was that fast, not nearly as fast as these routes. So anyways, I think any route you use would be pretty much equal. All right, and also I didn't mention this already. I will mention it again at the end of the webinar, but we're actually hosting a webinar this week over at Warrior Trading that you guys are welcome to register to if you want. If you go to webinar.warriortrading.com, you'll see the sign up there for that webinar. All right, so that's later this week, and I'll be able to go into a lot more detail. It's going to be like probably a 2.5 hour long webinar. All right, and it's free, so you guys can check it out if you want. All right, so anyways, we've got our custom order here. And again, we would go to map the key now. Now, I'm not going to do that because I don't want to save it. So I'll probably cancel, and then let's go back in here. Let's go back in here. So custom orders. Oh, sorry. Let's go to keyboard. All right, so these are all my custom commands. You can create custom commands for a 10-cent stop, a 20-cent stop, selling on the ask, selling on the bid, lots of custom commands. These are the ones that I have. I have 3 for selling on the bid, to sell sell full, half, and quarter position, and I have 3 for selling on the ask, full, half, and quarter position. So 6 orders for selling, 1 order for buying 2,500 shares, and 1 order for canceling open orders. This is so important because, you know, if you do press an order, let's say to buy 2,500 shares, and it doesn't get filled, the stock squeezes up, you want to not forget to cancel it. So right down here, you drop down to cancel orders, scroll down a little bit here, and there we go, cancel all. So I script that to my Control Q button because that one for me just is the most intuitive. All right, so that really is a quick walkthrough of my favorite hotkeys. 1 hotkey for buying, 6 hotkeys for selling, and 1 hotkey for canceling my open orders. And that right there allows me to trade as quickly as you can see right here. I mean, these trades go through really fast. Now, one tip that I have for you, this is a pro trader tip, is to separate your active orders from your closed orders. I like to do this because I don't want to accidentally have an active order get buried way up here and forget that it's still active, right? I want to make sure that if I have an active order, I can see it. So, you know, if I put an order to buy, you know, whatever 10 shares of this stock down at, you know, $1.45 or something, it's going to show right here as an active order. I don't want to lose track of that. It's very important that I know when I'm about to shut down and go to lunch that, hey, I've got an active order, I got to cancel it. So I'll cancel this here, or I could cancel it pressing Control Q. What you do is you go settings, and let's see, we change this to display and show active orders. Now, if I showed executed orders, boom, they're all right there. If I showed canceled orders, boom, those are all right there. And that's when things start to get lost. So I have 1 for active orders, and then I have this one right here to show all of those canceled and executed orders. Keep them separate. Don't lose track of open orders. You don't want to come back after lunch and realize you accidentally bought 2,500 shares of, you know, some random stock because you forgot to cancel your order. All right, so that's a tip for you guys that I definitely recommend. I also recommend that you remember your hotkeys work based on which level 2 is highlighted. So the way I have this differentiate the highlight is by making all of these level 2s kind of a little bit opaque, like a little bit pastel, and the colors in this one are brighter. So you can also see the yellow kind of ring around the level 2. That means if my orders, if I'm pressing the hotkeys, they're going to work because I'm on this window. So let's see. You can change this by right-clicking. Right-click and then go to level 2 fonts, designs, and colors. And here you can change the font size. You can change the color. So let's say font size. I want to make it, you know, whatever different color. You can change it. Let's see. You can change it there. Go back to cancel. The background, we've got set it green. So I could, for instance, make it bright blue like that. And now it's very easy to recognize, oh, this is the one where my orders are going to execute, right? Because it's blue. You can do whatever you want, but it's cool that you can really customize that, you know, based on whether it's being highlighted or not. You can also change the order here of your market maker, your price, and your shares. You kind of just get familiar with what you're familiar with. So, you know, it's totally whatever you guys are comfortable with. You can change the decimal points if you do trade, you know, penny stocks and stuff like that. I don't trade them, but not stocks under $1 usually. But, you know, if you wanted to, you could, and you could get that set up. All right, so let me look at a couple of these questions. So no, so this webinar, and I'll just give you guys the link here. So this webinar today, I know Rob is going to have a recording available, so you guys will be able to rewatch this one again. I'm hosting a webinar this week over at Warrior Trading, and you guys can see it right here. It's webinar.warriortrading.com/signup. All right, so I might drop that in the room for you guys. But yeah, so let's see. In that webinar, we're going to talk more about chart patterns and finding those A-quality setups. Today was a little bit more of the nitty-gritty, but I wanted to give you guys some of that info because so many people have been asking about setting up the hotkeys, how to use level 2, time and sales, and so I think this will answer a lot of those questions. All right, so Adam, how do I set up limit orders for a stop loss? So the price seems to be going down quick, but you want to get out. How do you decide quickly the price you want to get out at? So I don't personally use stop orders, and I'm not, recommending you do or you don't. It's totally your call. I don't use them. What I do instead is if I see the price going down, if it's breaking, let's say in this case, I got in the stock right here. I got back in at $1.72 for the break of the first 1 minute candle to make a new high. And it popped up to a high of 90, and then it dropped down. As it dropped back down, as I saw it break below the low of the previous candle, I was like, I got to get out. I got to bail. All the selling on the time and sales. So boom, I press the sell button, Control Z. Now, what you can do if you want to, try to manage your risk when you're taking trades, you can set a 10-cent stop. So we'll go to edit. This is a stop order. It's a stop. All right. So it's 10 cents. It's a sell order, and it's through 10 cents below the bid. So I use this as a 10-cent stop below the bid. I personally don't use it because the thing is, then you've got to cancel the order. I'm just not in the habit of doing that, but you certainly could. There's ways to set them up. So Sebastian, yeah, that also answers your question that no, I don't have a hard stop when I enter trades. I know I have a max loss of usually 20 cents or about $1,000. That's how much I'm willing to risk, but I don't have a hard stop. And yeah, we don't do the free chat Mondays anymore, but what we do at Warrior Trading are 5-day free trials. So you could join us for a full 5 days and get a better sense of what it's like. We found that doing that, people got a better kind of experience in the room over 5 days than just on a Monday. And just by having to pay as little as $5, people take it a little more seriously than just kind of the free chat Monday. So it's actually been I think a pretty good change. Yeah, so webinar.warriortrading.com/signup. Send to all. There, I don't know if that went through, but let's see. So are hot buttons as effective? So I never actually used the hot buttons here. If you go to new and then you scroll down, you'll see where is it? Hot buttons. And you can go in here and you can add a button for orders. So it looks like actually I could add this right here for maybe buying 2,500 shares. I just haven't used it. Let's see, go to add. So I guess that would work based on the window that I'm highlighted on. I think it would take longer to mouse over here than it would take for me just to press Shift 1 though. I think that's faster. So I'd probably just do that instead for me. Let's see, so to confirm, limit buy 5 cents above the ask, sell limit 5 cents below the bid. Yep, you got it. 5 cents above, 5 cents below. That's what I use. And you're free to use that idea if you like it, or mess around, change it a little bit. Whatever is in line with your risk tolerance. This is just to help you as you're getting set up and everything. And nothing really happened to my hand. I just have carpal tunnel, so my wrist hurts, especially when I'm on the computer a lot. Let's see. So, and yeah, this Lightspeed platform is the one that I use. It's a desktop platform. And one of the things that I really love about it, in contrast to some of the other platforms out there, is if I close it and then log in on my other computer, the same layout pops up. I don't have to copy files on the desktop. Like it remembers, and it makes it super easy for me to go from computer to computer and quickly log. One computer crashes or is doing a Windows update in the middle of my trading, I can quickly switch over. So Barry, that's a great question. When a trade is open, what am I watching most closely? Level 2, the chart, or my P&L? So I'm not watching my P&L. I don't watch that. That's over here. I really don't watch that at all. I'm watching the ask price. It's funny because I don't really watch the bid price when I'm in a trade. I'm not watching that side. I'm watching the ask. I know very clearly that's what my eye is looking at. That's the best price that I could get out at. And I'm looking at always potentially selling on the ask. So, it is just the price I'm looking at. Now, I don't need to look at the chart because I have the chart right here side by side. And so I'll say, okay, guys, I want to get in this at 177 for the first 1 minute candle to make a new high. So now I remember the price 177 and I look at the level 2. When I see 177 breaking with the volume coming in, I buy it. And now if it breaks, I know the first candle made a new high because I'm just remembering it. Now, every few seconds, I will look over at the chart and I say, okay, this is looking good. Remember, we've got the timer up here. So I look and say, oh, we've got 30 seconds left on this current 1 minute candle, right? This 1 minute candle is about to close. So I want to look at the pattern. Is it a doji? Is it a shooting star? Is it a hammer? So I keep looking back and forth between the ask price and the chart. Ask and chart. And I glance at the bid. Oh, hey, there's a 12,000 share buyer. That's significant. Or, oh, hey, there's a 50,000 share seller. That's a little bit of an issue. So I glance at it, but it's kind of like when you're driving. You glance at your mirrors, but you're mostly looking out the front window. And so I'm mostly looking at the ask, and then I glance at the chart, and then I glance at this. I glance at my P&L. Oh, I'm up 1,000. Okay, good. But I'm mostly honed in on the level 2 and reading the tape. That's really what I'm focused in on the most. Let's see. Just scrolling up here. So did I color code my keys before I memorized them? No, I didn't color code them, but what I did is I cut up little pieces of like a sticky pad, like a notepad or whatever, and just taped like by 2500 in really small writing to the key. So I would just tape it to the key and put it right there. So one of my older computers, I don't know where it is, over on the shelf over there, still has, I think, some of those keys, with stickers on them. So I made stickers and I just memorized them. I mean, I would unplug the computer, take the battery out, and just sit with it on my lap at night, pressing those keys and testing it out. I mean, really, if you want to be a successful trader, it comes down to discipline, dedication, and drive. Yes, trading and learning to trade is hard, but once you've got it, once you've got those skills, it's a lot of fun, and it becomes second nature. It starts to become easy, even though there's challenges with the emotions and that stuff. It really becomes a lot of fun. So it looks like we're coming up, quickly here on 5:30, and what I'll do is hand it back over to Rob, and just remind you guys, join me in my webinar this week. It'll be a lot of fun. I'll give all of you guys a free copy of my best-selling book titled How to Day Trade. It's a bestseller on Amazon and Barnes & Noble. So you get a copy of my book. It'll be a 2-hour webinar. I'll show you guys how to scan, how to find the charts, and how to identify those A-quality patterns. You combine that with what you learned today about hotkeys, and you guys are going to be in pretty good shape.
Great. Ross, thank you so much. We really appreciate it. Hope everyone was able to really get a good look at your style and how you set up the momentum and qualify your trades and set up those hotkeys. I know it's definitely a great experience for us to see what you're doing. Guys, we appreciate you guys for joining us. We're going to have a copy of this put on our website within the next couple of days. We'll send a follow-up email as well. So we thank you for attending. Look out for some additional webinars as well. And certainly contact us with any questions. You can email sales@lightspeed.com for any new account questions. And certainly you could request a demo of the software. And we're happy to help with any of these hotkey setups and questions as well. So thanks for attending. Ross, thank you very much. And guys,
Sure thing. Thank
have
you.
a great night. We'll be in touch. Thank you.
Thanks, everybody.
Take
Bye.
care.